All righty. Good evening, everyone. Welcome to Trade Findings and Adjustments for Tuesday, the 26th of March. My name is Kevin Hurley, and I will be with you for the next half hour or so. Let's going to find some trades and possible adjustments to work on for the end of this week. I'm going to make a special notice or a special shout out to my wife who's here attending today. So for those that want to say hello to my wife, she is in the background. She is watching and listening to me today. Usually does not happen as she's corralling the natives in the family, so to speak, the six little munchkins. But there you go. A couple just said, hello, wife. Hi, hi. So I'm assuming they're talking to you, not me. She's here. She's listening to me, so I'm going to be on my best behavior tonight. With that said, here we are on approaching the end of the month. If you were going to tell me about our stock market, what will most influence a trade to be put on this week? What will most influence a trade to put on this week? What do you think? A weekly options expiration. That is a good guess, but I would not think you'd be putting on a 4-day option spread this close to the end of the week. So that is true, an options expiration here, a weekly options expiration, but I would tell you it is not a good idea to be placing an options expiration trade with 4 days left if that's something that's going to most affect the trade you're going to put on this week. The trade is too short term, even for a credit spread. Your probabilities would be horrible. It is not a good idea. So, yes, that could affect you, but I do hope you are not placing 3 to 4 day trades and trying to be profitable or consistent with it. That just will not happen. What else is happening? There you go. That is correct. We have the end of a month. So I could also tell you end of a month. I can't type. End of a month. End of a quarter. And most likely a sell-off to cover taxes that will be due the middle of next month. So what do I mean by that? Well, you have an end of the month. Usually there's some type of rebalancing, restructuring, taking some profit, selling off. It's just an end of a month, which usually is nice because you have a nice pop up at the beginning of the next month. Kind of sucks for me because if I'm doing my commissions off of, my management fees off of end of the month totals, here I am doing great for 28 days. Some end of the month selling happens. I charge on assets under management, so less assets under management means a less of a management fee. It bounces back up the following of the next month and I get paid less. Kind of a bummer for those that are working assets under management. But you will see some type of mutual fund rebalancing, which usually includes a sell-off or taking some profits. Day trading and so forth, again, you'll also see some sell-off there. Expect to see, in all honesty, end of a quarter. So you'll see more mutual fund ETF rebalancing than normal. You also will see some spiders and major index rebalancing. Most likely, historically, this is a month when people are going to have 3 to 5 days, 3 to 7 days for mutual fund sales to get through. to actually clear so they can then take money out, 2 to 3 days to get to a bank. You should see the selling off now for people that need to cover their taxes. Last week, I initiated on Friday a transfer of money into my account so I could do just that, pay the quarterlies, have money for my taxes, and that was transferred on over. A little bit different because I don't have to be fully invested. I can protect my stock ownership with obviously options, and because I like to hold on to some cash. So what we're up against is most likely some quick selling here at the end of the month. We'll most likely see a bounce back up beginning of April, if not after taxes in April, the start of the new earnings season, which will be the end of April. So if I was to ask you, does today seem like the best day to put on a trade? My wife is shaking her head no. There you guys go. Yeah, today is probably not the best day to put on a trade. End of the month, end of a quarter, sell off to cover taxes. Most likely we will see, or the probabilities are we will see a drop in the next couple days on our stock market. Not the best day to put on a trade, but that doesn't mean you can't take advantage of a short-term drop in the stock market. What could you do? What could you do? If you wanted to, what could you do to take advantage? Lance, you are correct. That's close. But let me put this a little different way. You could wait and buy into the selling on Friday, assuming it is selling on Friday. That is correct. I agree with this one too, Rick, or Rich, excuse me. I've got a Rick and a Rich here. Rich, I agree with you as well. You could go directional long on puts. And not that either one of those are wrong, because in all honesty, you could buy into the selling on Friday, and 30 days, you'll most likely see a higher stock price. You could go directional. Probabilities are, Rick, that you are correct. You'll make a little something on the downward movement. My issue with both of those is it's directional. That you have a 1 out of 3 chance of being correct. Now, if you're buying into the selling on Friday, you're buying stock ownership, I agree with you. That's not a bad idea. Directional long puts, I would probably say you got a 95% chance of making money on some type of directional long puts on the indexes in some way, shape, or form. How much? I don't know. If the volatility kicks up, it'll help out your trade. You might have to be out of it by Friday because, in all honesty, it could evaporate away by Monday, rolling into a new month of options expiration. And because you could see some buying into Monday. I was actually thinking of getting you through the event. So for me, and my thinking was let's get through the event, offer a, let's say, I would actually not offer, look for a spread. Yes, that's my wife's phone in the background that's going off. I should have told her, put it on mute. You could offer a spread where you leg in and out, which obviously is timing, which is why I wouldn't like a directional position. Or look longer term. Something I did today, if I pull open my account today, and this was probably spread through a couple different accounts. It might have been all in mine. I took a look at Bank of America. And I added back in to some of my positions. Let me get this out here. I added in a cheaper price than that I currently have on some January 2020 $35 calls that were put in at 28 cents. Currently, there were 30 cents. So, dang it, I almost got like 8% return. 2 whopping pennies. But 2 whopping pennies on 25 contracts. Do some math here. 2,500 contracts times 0.02. Hey, I made $50 today. My expectation is I will put a limit order to most likely try to get out at 48 cents. And it was trading at 48 cents 2 or 3 weeks ago. Overall, if you do the math on this, right, 2,500 times 0.28, we're talking it was a $700 trade. Not really expensive. It's a flyer. In all honesty, I would really like for some more selling Wednesday, Thursday, Friday, where if I could get this down to 20 cents, I might go put another 35 contracts on. At 35 contracts at 20 cents, that's another $700. And I could get my cost basis down to 24 cents. It'd be a $1,400 trade. At 24 cents, I'd get out in that 44, 45 cent range, have a chance to come close to doubling my money, but it'd be a good little return on a pop on Bank of America. I realize I might have to wait till August. Kevin, what do you mean you might have to wait till August? Kevin, you've already spoken about Bank of America. Why do you keep talking about all of these positions that you've already been in? Well, actually, let me go to E-Trade. Let's go to charts. If I go to Bank of America and I pull out a 5-year chart, I would like you to notice going back to 2014 here, we have a nice little run up. We have a nice little run up from August through December. August, September, October, November, December. And it actually was quite a move. I wish I could have it on here. We went from $15.18 up to $16.92, over a 15% run up. That same time, this one was a little bit more pronounced, $15.95 up to $17.50. 1, 2, 3, 4, 5. 2016, awesome run up. $14.52, $22. 2017, 1, 2, 3, 4, 5. 22.29 up to 29.52. Last year we did not have a run up. In fact, we ran down. So 4 out of 5 years we've had a nice move, a nice run up. We did not have it last year. I would look for the opportunity to have another nice run up this year. It does not mean it's going to happen. It just doesn't. Plain and simple, it doesn't. But for 4 out of 5 years, or 80% of the time over the last 5 years, we have a good run in BAC August through December. Keeps me out of January, keeps me out of the month of options expiration. It's a pretty cheap trade looking at things. Now, an interesting comment was just made. So let me go back and let me pull this out one more time. If it went south, would you cut your losses? And in all honesty, I would love to say sure. That's exactly what I would do. But what I've done in the past, especially in the last year, is no, I wouldn't cut my losses. I would dollar cost average. And if it looks bleak, I would lighten up on contracts so I could push everything out in time. Now, it's been an interesting trade because worked like perfection 2014. In 2015, I got out of half of my contracts, and then I got out of the rest of them. I did not dollar cost average, and I got out on the rest of them for basically a very small gain. Looked like a genius 2016, looked like a genius 2017. Last year, we did okay, and we got out of some of them. And then the last quarter we had, or last third we had, we rolled out in time to this year. And we've already dollar cost averaged them in January. Unfortunately, it was not close to that $24 mark. It was closer to the $25.50, $26 mark. So no, because I've bought so much time, I would not be looking to cut losses because there is an opportunity at 28 cents. I doubt it would go down to 14 cents, but financials have struggled, and you could see a pretty good drop. It's not my nature to say, hey, if I lose half of it, I get out of it. It's my nature to work the position, even if it's adding some long puts on. It's to work the position to profitability. So you can definitely set a 50% stop loss, get filled, maybe exit if you guess wrong to cut your losses. But that is not what I am typically doing. I'm typically doing the best I can to work my way through it. This also brings an interesting question, though. 25 contracts was only $700. I've got some cash sitting in the account, and I had to sell some stuff already, some Under Armour, to get out for my tax and my $4,000 quarterly payment that I'm making. So plan accordingly. If you can't dollar cost average, if you can't afford long puts, then definitely set a stop loss, have it be a flyer for you. It's funny because two of you came in. One of you made the comment, so if the market tanks and BAC goes south, would you not cut your losses? And the other one said, would you set a 50% stop order? Again, no, I wouldn't do either one of those. And hopefully I've got both your questions answered there. Another idea is I'm looking at some of the positions that have been beat up. so to speak, you could do really well picking a stock and trying to run them out through their earnings. So I could look at Bank of America one more time. It's a relatively cheap stock, trading at $27.21. It has its earnings, the middle. Bank of America would not be a good one. It has its earnings there in the middle of April on the 16th. Maybe Bank of America. Well, Boeing might be a hard one too. Not a bad day though today. They're on the 24th. I'm actually looking for something out in May. Under Armour, maybe? I love Under Armour. Another opportunity would be something like Under Armour. You could very easily purchase the stock. I said purchase the stock. Why does Under Armour not have a price attached to it right now? Under Armour has a zero bidder ask. That is really ridiculous. Got a position in it, but what if well, what I'm trying to show you is you could run out to something very close to where they're at, and the expectations would go down, so they're trading at 21.18. You could take in a $1.37 credit, purchasing the stock at 20.87. So if you use the midpoint, right, $1.37, you could make, if you sold it at 21, right, $21 strike, you'd make 13 cents on the stock. You could make $1.50 trading Under Armour for the next 8 weeks before its earnings. Trying to get out of it, obviously, before its earnings, closing it down. But $1.37 with support sitting at 20.60, 20.50. You have pretty good support there. And really $1.50 on, do some quick math for you. $1.50 divided by 20.87, but actually you're taking some off of that. So actually about 19.50, right? $1.50 divided by 19.50 is a 7.69% return for 2 weeks to get into a covered call. I made the comment I really liked Boeing too. In all honesty, I know Boeing's been beat up. I'm a little worried about what they're going to say, but I would love to look at Boeing. But for crying out loud, I can't believe E-Trade does not have. Something's going on. You can see up here, they don't have their bid in the ass. So they're having a little problem today. But kind of neat. You could buy Boeing at 370.38. It's down a little bit after hours. They have their earnings on the 24th. So if I was looking at a Boeing trade, I'd want to buy Boeing. I would most likely be doing that April 26th, and I would probably put it at the money. See what credit I would get. $13, so I'd only get about 2%. In fact, I may run out to a June. It's only in between them. Nope, I wouldn't. Numbers are talking to me. April 24th, 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 24th. I would look right here to buy the stock, to take in a $10.85 credit. If I do the math, roughly 360, right? So you're looking at 1085 divided by a risk of 360. You're looking at a 3% credit, a possible 3% return for doing an at-the-money covered call on Boeing. Are there some other stocks you could do this on? Yes. In fact, as I go through what I think of, Visa, good support at 150. You could do the same type of trade on Visa. It also reports a little bit later. It reports on the 24th. It actually reports on exactly the same day, right? You could buy Visa. And in the money, 152.50. That gives you $5.90. It could go just, you get yourself a 60-cent cushion below the 150 support level. You'd buy at 155.30. You'd take $5.90 credit in. I'd even probably push that up to $6. Your break even would be 149.30 at $6. You've got 60 to 70 cents below the 150 support level. And the neat thing is, if you look at a chart on these guys, and let's go take a peek at where is it? Let's go take a peek at stock charts. You've got the moving averages of Visa. Come on, give it to me. Update. Not where I thought they were. 144. It's Under Armour that I was looking at the other one. Under Armour would be a nice one for that in the money because you've got the support that it's on. Although that looks like it could be a breakout up or down. But only down to 20. Support at 20. So, short answer, when you are looking at some opportunities, longer term, Bank of America today, 28 cents per contract. You could get in tomorrow at 30 cents. In the money or at the money, short calls on stock before their earnings. And in all honesty, there's quite a few that look pretty good. Visa, Under Armour. Boeing would be one of my favorites right now. I'd almost say Disney, but it's below a support level. We could look at some other positions. In fact, let me ask you guys, what are some things that you're looking at? Nvidia's in between. Again, I don't like it either way. Apple is also in. Come on. Apple broke below the 200-day. I don't like it. Too far to fall down to the 171 50-day support or 175. I would not be doing a covered call strategy. Ulta has its earnings coming up. Not a good one to play, especially with that one. Has its earnings coming up really soon here. And it's quite a ways to a support level. That one would be no-go. That one, Lulu, neither one is a good one because it has its earnings coming up here really quickly. You don't want to run it through earnings. Well, actually, let me take that back. You are correct. This one would be a good one. This would be a really good one. Good call, Ida. Tell me sometimes, Kevin, just be quiet. They're all the way out to May. This might be a really good one. Only $14, $15. You want to sell it though. Give you a midpoint at 327 to 329 to 325.80. So you're looking at 327. If I looked at a chart at 327 on Ulta, 305 is the downside. 327 is the most recent though. So that might give you a little bit of protection down to the most recent lows, sitting at 330, maybe probably above that 327. You know, that might work. I don't know this. I would, in all honesty, I would prefer that 50-day would be closer to the 327 mark. You have a really short-term support level there. It didn't really build, but it did bounce off of 330. So technically, Ida, this would be a good one. This is one that could work. I'm not necessarily a fan of it because I don't know it, and it looks like it's at all-time highs. But mathematically, you're protecting yourself below a short-term support level, and that'd have to take a $12 drop. That it's a pretty good. The numbers work out nicely, Ida. That could be a pretty decent one. In all honesty, for some reason, I thought it was having its earnings, so I do apologize there. I wonder if Lulu is who I'm thinking of. Although, let's go to Lulu. Lulu has theirs on the 27th. That's what I was thinking of. Ulta is one that would work. The numbers work out. It puts you below the support level. Support level is a little short term, but you know what? Ulta works very well. And they probably just recently had its earnings. So you could run the bullish sentiment. But yes, that works. Any other ideas that you guys have? If not, let me get this on and posted for you guys. I appreciate having you here. But here you go, looking into the mind of how I'm looking at the stock market. And again, I'm looking at it on if you can protect yourself, you'll be in really good shape. You guys have a great evening. I appreciate you being here. Look forward to seeing you Thursday morning, 10 a.m. Mountain Standard Time. That is at 12 noon Eastern Standard Time. Drea, that's my wife. Thank you for attending with me tonight. And guys, look forward to seeing you on Thursday. Have a good evening. Bye-bye.